Mohit Gang joins me this morning to make sense of what's going on in the Indian markets and the mood on the street this morning. Mohit, good morning. Pleasure having you back with us on News 9. A quiet weekend, not too many triggers. Donald Trump has not really come out with too many weekend announcements. What's your assessment of the mood of the market this morning, Mohit?
Yeah. Hi. Morning, Karthik. And I think it's a quiet start to the month of May, as you rightly put it out. Look, honestly, I think from a Trump perspective, there are a few announcements which keep coming here and there, which is that I think he's trying and making a point that China is too keen on negotiating and they're suffering, and as in there's a lot of pain in the economy. And so I think the indications are that he will arrive, or perhaps US might just blink first and arrive at a conclusion with the Chinese in terms of the trade negotiations. So that kind of augurs well for the global economy. However, if that is delayed, I think the chances of recession keep increasing with every single day passing by. Right. So, and it's just not US, it's also China. So, put together both the economies, if they go under any form of recession, then I think the global economy is up for a toss. So that's from a US perspective. From an Indian perspective, honestly, I think the flows have been very steady. FIs seem to be finding way back home. And I think that's more to do with the global scenario because US now looks more like a place from where the flows are coming out.
Right.
Because the FIs are not so clear as to where to invest in US markets. And China, of course, is not on their radar right now. So the third biggest economy, the third biggest play then becomes India, which is relatively safer, though the valuations might still be a little high from an FI perspective. But I think from a safety perspective, Indian markets offer them that free entry and exit and perhaps a steady regime of political outlook also. So I
Right.
think from that perspective, India looks pretty steady and stable.
Right, so India is looking pretty stable, especially for FIIs. But I want to stay just a little bit longer with Donald Trump's tariffs, as well as the commentary which is coming in on the state of affairs for the U.S. economy. Now, Ray Dalio has said that there could be a recession or something even worse than a recession for the U.S. And meanwhile, Donald Trump over the weekend, if you remember, Mohit, is also pretty clear that American children should go and buy fewer toys, perhaps be happy with $2 instead of 30. So not really underpinning the importance of inflation and how US inflation will stack up if supply from China reduces in the US market. And then overall high inflation, low growth could potentially lead to recession, or as Ray Dalio said, maybe something even worse than recession. So if that is something that Donald Trump does take the US economy towards, then what is the kind of implication it will happen on, on foreign flows, foreign investments? Do you see a scenario where more money will likely flow into the Indian market, or US goes into recession and becomes a problem for everybody else?
Oh, look, I think two parts to it, Karthik. Honestly, I think there is no denying the fact that US gradually is inching towards recession with every passing day. As I mentioned,
Okay.
the probability keeps increasing, and I think the data will start coming out from next quarter onwards. But my sense is this financial year, US will show all signs of recession until something dramatic is done to reverse the entire tariff war scenario, which I don't think so is likely, right? I think Trump in his heart knows that it's a long game, and perhaps he's willing to play that game given the statements which he's making. It looks like that he's willing to park himself for a pretty long game out there, right? And a long game will mean global recession, and especially US recession. So that's there. But yes, in terms of destination, as I mentioned, India looks extremely attractive. Look, the interest rate regime is coming off in India. The liquidity scenario is looking pretty good. Inflation is well under control. The headline macros are pretty much looking very nice and neat. The economy is growing steady between 6 to 6.5%. Right. So all those check boxes are pretty much ticked out here. The only thing which can perhaps derail the Indian scenario is a longish skirmish with the neighbor, which also I don't think so. There is a huge probability. There is definitely a possibility of a retaliatory action and then a retaliatory action and so on and so forth. But I don't think so. Longish skirmish kind of awaits us. So if we are pretty much done with it in a month or so, then I think we are up on track. And I think the economy should start looking up. And even if the economy doesn't show great signs of revival, I think the global flows will keep finding India as a safer destination, as I said, because after US and China, the third market for them is India, with slightly attractive returns and better macros. So I think India kind of in the pecking order then scales up beyond US and China both.
All right. So, talking about the skirmish and the potential, breakout of some military operations on the border, Mohit, what are the markets factoring in right now? Are the markets factoring in just a day or two of a skirmish like we had seen during Balakot or the Uri surgical strike, or are we looking at something? Are the markets looking at something a little more prolonged this time? What are investors factoring in at these levels?
Look, honestly, I don't think so. Markets are looking at something dramatic this time
Okay.
here, barring the 1 or 2 days of red in the market when the incident actually happened in Pahalgam. There has
Yeah.
been no sign in the market of abatement, as in market doesn't look like it is factoring in too much of action out there. It's perhaps will be a more calibrated measure and more diplomatic and what do you say, measures which are on the sideline but not directly military actions, and which I think the Indian government has been taking. Every day you get a news flow which says that there is the whatever, the ports are closed, the airspace is closed, the postal services are closed, so on and so forth, right? So the diplomatic measures are on, which I think will get more severe as days pass by. But I don't think so that impacts Indian economy too much. The import and export getting curbed from Pakistan is barely a dent in the Indian economy, right? So markets I think are pretty much good with the event. I think, but though markets would like the event to get done with, and that's where we don't have clarity as of now. So which is what all of us are waiting. And once the event is done, I think we can then see a significant move up in the market.
All right. And beyond perhaps, India's potential response to the Pahalgam terrorist attacks, are there any other domestic factors that markets should await? Because it seems recession in the US may not hit. We don't know external factors, global factors. But on the domestic front, inflation seems to now be under control. RBI has gone ahead and cut interest rates again in the last MPC. And more or less, the earnings season of Q4 is also over, at least for the large companies. What are the next immediate factors that investors should watch out for to decide on their future course of investments?
Look, I think couple of things from my perspective. I think monsoon remains the biggest thing as we head into the season. And how does the overall rain scenario pan out, pan country is something which we will have to check. That's point number one. Point number two is the US-India trade deal and the India-Europe FTA. I think those are two things which can be of significant importance. Honestly, I think those are landmark things. If they happen within next quarter or even if in this calendar year, I think these will be massive turnaround points for the economy as a whole. And these are as large developments as perhaps the 91 liberalization kind of a thing, right? So if we click a trade deal with the two biggest trading blocks of the world, which is the European Union and the US, then I think we have a long way to go, and we have a very robust, steady path ahead of us. So from my perspective, I think these are the most important things which I'm watching out for. Though I'm pretty much not sure on the timelines of these. These are massive negotiating points,
Correct.
and will perhaps take a lot of time to iron it out. But yeah, I think that's it. And one more point, Karthik, which I want to add to my commentary
Yeah.
is that if you look at oil, crude oil, right?
Yeah.
India might just be what do you say? India might just suffer if US and China go into recession. But look at where the crude oil is today, at
That's
sub
right.
60, which is at
That's right.
$59. I think that's a significant boon for Indian economy. Honestly, if crude remains in this level for next 3 6 months, then we are any which ways looking very good on the fiscal side of ours. So I think all in all, the macros are looking pretty positive now.
All right. And yeah, the commentary which is coming, Mohit, from Barclays at least, is that crude for this year, the year 2025, is being factored in at $66, and that'll move sharply down to 60 for the year 2026. So if crude continues to be in this range, it seems that not just 2025, but 2025 and 2026 could both be good years for India. I just want to end by asking you one more question specific to tariffs and the negotiations with US that you mentioned. Of course, these are hard negotiations and one doesn't really know the timelines of closure. But in case US was to get its way around by India lowering some tariffs, of course, one level of the argument is that it will bode well for the Indian consumers, because a lot of imported goods into India will technically become cheaper, but then this also raises competition for domestic producers of similar goods, thereby perhaps corporate earnings in India could take a beating going forward as way of India reducing its tariffs to negotiate a deal with the US. Is that a fair assumption and fear, Mohit?
I would say yes, Karthik. Look, there's always a give and take in any kind of trade negotiation, right? And India will have to concede some inches. India runs a trade surplus with US, and perhaps US will look at evening that out, which means India will have to import perhaps larger quantity of crude oil and few other things from US, which India has already started, and maybe a significant portion of that will come from defense imports. I think India, even if India turns around the needle on defense imports from, let's say, a Russia or a France or somewhat other European countries to, let's say, US a little bit. I think that will just balance out the trade thing with US, and which is what US is looking for. My sense is even US as an economy wants to send a signal out to the global world that they are closing negotiations with larger economies, right?
Right.
And they are getting an ace up on larger economies, and perhaps they want to showcase India as the first example globally of a large country which has kind of come on the table and signed a deal. And from an Indian perspective, I think it's a win-win. India needs US as a backer geopolitically also, and India
Right.
needs US to back it up in terms of flows and many other things. So my sense is India-US trade deal, the sooner it happens, will be a great sign for both the economies. And I'm just hoping and keeping my fingers crossed that this happens in next 3 to 6 months.
All right, Mohit. Well, let's do hope that this does happen in the next 3 to 6 months. Thank you so much for joining us here on News 9 this morning, Mohit Gang.
Pleasure. Thanks.